Morning. This is Dylan Giovanni with Behind the Markets. Happy Thursday. Today is Thursday, June 11th. I know this is not the SpaceX channel, but I will talk about it today because it is the day before SpaceX goes public tomorrow. Symbol SPCX, Sam, Paul, Charlie, X-ray, coming out at $135 a share. That is what it looks like. The order book is being closed tonight. Once I have this video, I will get back to a more normal course of business because we have to get back to a more normal course of business, more balanced, because there are other things that are actually happening that need our attention, specifically the Iran war heating up, of course, curiously not crushing oil prices, but that's another topic. And also the sudden flood of stock on the market, hitting the market, aside from IPOs, SpaceX, OpenAI, and Anthropic, aside from them, you have a sudden flood of stock hitting the market from Mag 7 companies and other AI participants. Yesterday, Supermicro announced that they're doing a $7 billion offering, and that has a lot of risks, all those things coming onto the market. So we will talk about this. Believe me, we're going to pivot to that, or I wouldn't be doing you a service. But anyway, back to SpaceX. I know you guys are excited. Tomorrow's the big day. So I told you I'd share some research with you on how to best trade IPOs or what you should expect or watch out for. So I have some stuff, and a lot of it comes from a book called The Life Cycle Trade, How to Win at Trading IPOs. You can get that yourself. And some of it comes from Mike Webster at Investors Business Daily, who compiled a lot of research on this and presented this. So these are my sources. So here we go. Number one, 90% of IPOs eventually trade below their first day low. So 90%. So even if a stock eventually recovers, that process can take a long time. That's the first thing you need to know. Okay? It's amazing, really. So what they say is, basically here, the big picture is these things pop and eventually they trade below their first day. So what you want to do is you want to wait for the IPO base. If you're not sure, if you just want to trade around SpaceX, here's how you do it. You want to wait for the IPO base. So the research, the history shows it is best to wait a few days or weeks for the IPO base to take shape on any new issue, really, regardless whether it is soaring or crumbling. And that usually takes 2 to 5 weeks, but it can form in as little as 7 days. So again, the big pop when it comes up, and usually 90% of them trade below that low for the day, the first day low, basically where they open, most likely, Then they come back down. The base is a stabilization period. And that's what you're looking for, a healthy stabilization period. There's no doubt about that. The IPO base starts to form when the stock stabilizes. And this is when investors start to trade. This is actually when the market is made away from the IPO. The market independently begins to value this company away from all the hype, away from all the propaganda. That's the way it is. Very, very important when the market, the price stabilizes and buyers and sellers on aggregate agree on that valuation. That's what's happening. It's a very, very important thing. So by the way, these can dip, a stock can dip for a longer period of time. It could drop, first of all, it could drop, as I said, 2 to 5 weeks, but it can form in as little as 7 days, that whole entire base. And the pullback typically is 20%, but in periods of extreme volatility, you could see this thing crack down 50%. But it just happens to be, it seems like we're entering a period of volatility. So I wouldn't be surprised at any of those numbers. But here's the thing. When do you buy it if you're looking to trade it, okay? The company pops up, goes down, forms a base, and basically when it starts to break out of the base, that is the peak buying opportunity because that forces the stock to prove itself first. That is what the research shows, 80 years of research. And Mike Webster from IBD said the most successful IPO base breakouts have 2 key traits. major single day price surge and heavy volume. So in other words, it pops up, it comes down, forms that base. They used to call it a cup and handle in technical analysis. And then it breaks out on heavy volume and you get a price spike. So again, that indicates obviously a lot of demand at that level and a stock that looks to march higher. So again, takeaways for you. Again, I'm asked all the time, should I buy SpaceX? Should I not? I have no idea if you should buy SpaceX or not. But if you didn't get any on the IPO and you might be interested in doing this, again, the history shows 90% of IPOs eventually trade below their first day low. Even if a stock recovers, this process can take a long time. So if you're on the fence, you're not exactly sure, you feel like you missed out, oh my God, it went up, a jump from 135 to 170, never gonna get it again. If you're saying to yourself, history says 90% odds say it will eventually come below its first day low. So keep an eye on that first day low. Very, very important number if you want to trade using this kind of strategy. Anyway, that's all I have for you today. Have a wonderful day. See you tomorrow.